Good evening and welcome to the Locke in Your Success Trade and Market Update for January 13th, 2013. Seems that we had a fairly flat market last week, and the Russell itself did decide to keep on creeping up. If we take a look at our charts here, we got this really big up move, and then we just continued to creep. This is pretty typical of what the Russell's been doing for the last year or so. So we get these really big up moves, we get sideways and a bit of a continued creep, and then eventually tops out and then reverses. So if we take a look at the SPX, one thing we can see here is the SPX has come right up into its resistance area. I would expect that this area is probably going to hold or maybe temporarily break and then come right back down under. And we'll have to see what happens here. And this is going to kind of tell us what happens with the Russell. If we end up getting a strong break on here, then of course the Russell's going to follow suit and start to climb also. However, I do believe that we're going to kind of peter out right in this area and then probably reverse back down. If we take a look at our other indices here, such as the Dow, what we have is we had this little handle here and we broke a little bit higher. We are in a resistance zone. We could turn anywhere from here. Of course, our high target at this point is like 13,650. But again, I don't believe we're going to get there at this point. We're a little overextended in the SPX, and we're a little overextended. We're definitely way overextended in the Russell. If we take a look at the NASDAQ, this here is the index to trade if you have a market neutral approach right now. Look how for the last 2 months, I mean, iron condors or any kind of market neutral stuff, even with this breakout, that's still not a very big move for the NASDAQ when you consider how much it usually moves. So this is last 2 months have been very good for any kind of market neutral strategy in this index here, which is pretty much the only one. But that's unusual. Usually the NASDAQ's a little more volatile than that. And then we come back to the Russell. What's been happening follows suit. We're going to try and push up or sideways and slightly higher into expiration. And at some point in the next week or so, we're probably going to end up reversing. Here is the February expiration. I'm believing that February is going to expire somewhere down here at the 860 level. So what I'm expecting is possibly a little bit higher here. Maybe not. We may be topped out because SPX is, but possibly a little bit higher here, and then for us to reverse and probably head back down and start testing some support areas later in the month. I wouldn't expect it right away, but later in the month, possibly towards the end of January and beginning of February. We're going to start tanking down, coming back in and down to this level. So, what's going to change that? My opinion will change if we get a strong breakout of the SPX and it comes back and retests. So if we get a nice little breakout up into here, and we come back and we retest 1475 area, and then continue higher, then the Russell's going to continue to fly. But I think it's time for things to settle back a little bit. We shall see what happens. All right, let's take a look at our positions. One thing I want to note is that I completely screwed up monitoring my January M3 position. So the position here that you see is somewhat different than what I've been showing in the past. It's the profit and loss is pretty much the same. It really didn't make a whole lot of difference from that perspective. However, the position is not the same. What I actually have going on here is 1/820 butterfly, which I thought I sold all of those, and 4/840 butterflies. I thought I had 5 of them. I'm also short a 770 call, which I was unaware of, and I have this really wide vertical going on here, 800, 870. Again, this got mixed up with another position, and this is just what I have. So here's the deal. 1/820 butterfly, 4/840 butterflies, short a 770 call, long 7/800 calls, short 3/820 calls, long 7/840 calls, short 7/860 calls, and short 1/870 call. And this gives us an analyzed graph that looks like this. Of course, with the market creeping up, we haven't been able to make any progress here. We're just gradually taking risk off the front side of this. This is pretty much toast now. I mean, I just am looking to get out of this on Monday. Especially if the market backs down, I'll definitely be excited to get out if it continues up. we'll probably take a little bit bigger loss. Realistically, the opportunity is in February right now, so I just assume close this out and get into February. A shot up here would make a nice entry into February if it wants to go a little bit higher. But that's this position here, down about 1,400. Looks like we're going to have a couple of percent loss, maybe 3% loss from the month. We'll see what happens when we actually close out. And that is the M3 for January. Our bearish butterfly for January got beat up as well, right here. We are now down 5,000, so we're coming into line here. Our analyzed graph currently looks like this. We have, let's just see what we have here for butterflies. We have 5 830s, we have 10 850s, and we have 15 890s. And it's giving us a graph that looks like this. If we just kind of hang anywhere from this 860 level and we hang out under 890, then we'll be able to reduce our loss down to maybe $2,500 or so and be able to close out the position and move on. I may make some, I can, if I want to take on a little bit more directional risk, I could pop this exploration line up over here, but it's just not worth taking on a ton of risk right now. So we're just lowering our loss. We get to the point where probably 2,500 down, I'll probably just close this out and take just a very small loss for the month on both positions. So this has happened to us twice, December and January, which is very, very unusual. But with this, this one got us in December. This one kind of got us in January. So we'll see if we can't avoid that from happening. And yes, there are, let's go back to the Russell. So this one got us in December. This one got us in January. There are things we can do to defend against this, and things like that are covered in the rock system that we have. That they kind of jump on top of the market a little bit more. But as far as staying within the M3 guidelines and the bearish butterfly guidelines, what we're doing here is just perfectly fine. So we're happy with that, and I'm looking forward to the rest of the year, because now that we're up here, we should really slow down a little bit with our gains, and that will be really good for our positions. And let's see, the last thing we have on is the February bearish butterfly, which is down money, but it's looking good. So let's see here, February bearish butterfly is here. And currently we are sitting with 10 850 and 10 870s. I am due for a delta theta roll, where I would roll my 850s to 890. What I have had going on, I've just been so darn busy that I haven't had a chance to fool around with that. So at some point, and plus I'd like to see this break a little higher too. So if this looks like we're going to actually break higher, what we're going to do is roll these 850s to 890, and then when we exceed 890, we'll be putting the 910s on. And this looks like a good high probability trade at this point. Should be doing okay. Of course, if we back down a little bit, we'll look really nice too. So this, just to get a picture of the analyzed graph, this is what we're looking like. We are down, let's see here, about $2,800, which is no big deal. Our delta is almost at our complete maximum, and our delta theta ratio is off. So the position's a little out of whack, but we're happy with it for now. I'd like to see the market actually start traveling one way or the other before I make a decision to roll a little bit more on top of the market. We shall see, especially since my bigger opinion is that the market is actually going to end up down in this 870 level down in this 860 level. Since that is my opinion, I am avoiding doing the roll, because if this does actually roll over and come into the 860, this is going to be really nice towards the end of the month if I don't need to adjust it up. But if it forces us to do so, it will, and we will just deal with it from there. All right, those are our positions. I'm looking to close out, well, it's going to be the end of the January trade, it's the end of the week no matter what, and I'm just looking to reduce my loss as much as possible on the January bearish butterfly and close out of that and continue trading February. The M3, really I wanted to close out of this Friday. I just simply did not have the time to do it. One of the things I was looking at it and I said, oh, I don't have the position on that I think I have on. So I had to spend the time straightening my position out instead of exiting the position. Now that I have it straightened out, I'm good to go early next week to close that out and get into February. All right, that's it for now. Have a great week, everybody, and I will keep you updated with any changes. Thank you, and good night.